Hi there, welcome to Kneppy Invests. I hope today is an exciting video for you because even though the vast majority of videos I do in this channel feature Australian companies on the ASX or just international companies on the ASX, I am trying to diversify the range of companies I am featuring in this video channel. So I'll be looking at some international companies. And one of the reasons I want to do that is because I am trying to diversify my own investments. Over the past 12 or 13 years since I started investing, I have stayed in the Australian market. I have started to look on international exchanges, including the United States, NASDAQ, New York Stock Exchange. I've also looked at some other international exchanges in Europe because there are some good companies there. And one of the reasons I am trying to diversify where I'm looking at investing in is just to find those really rapidly growing companies that are at good value. And one of the reasons I've decided to look at Tesla is probably because this is one of the most divisive companies in the world currently and has been for the last 4 or 5 years. There's one group of people who believe this is one of the most overvalued companies in the history of mankind, and these tend to be value investors. And to be honest, they have been wrong over the past few years. And there's another group of investors who believe this company is actually cheap right now. In fact, there was a podcast, I didn't listen to it, but the title was Tesla is cheap right now. It wasn't surprising to me because one of the guys who does that podcast has been bullish forever about Tesla. And I believe those people who believe Tesla is cheap right now are all thinking about the future potential of this company. And it's really interesting because there are a million potential futures for Tesla. And if you are a little bit bullish about this company, you could be a little bit over optimistic. But those value investors who believe this is completely overvalued are really only looking at the past. They're looking at the company was not profitable until maybe a few years ago. And that's all in their mind. This company's not profitable. Why would you be paying so much? But forgetting the growth rate in this company has been phenomenal over the past few years. And if that continues, which looks like it might, this company might not be that expensive right now. They're also diversified into other areas, clean energy. And we're also interested in SpaceX, which I'm not sure if that's going to be a part of Tesla or if that's going to be its own company in the end. Another reason I've decided to take a look at Tesla is because as I was doing my research, I just want to know what are the best electric vehicles manufacturers out there. Tesla is the best. It is in terms of producing the most electric vehicles. But coming up second and very close is a Chinese company, which I definitely won't look at. But there's also Volkswagen. I was sort of surprised the amount of brands in the Volkswagen company, including, of course, Volkswagen, but also Skoda, Audi, Lamborghini, Bentley, and Porsche. And I just Googled the best electric vehicles in the world, and there's all these websites coming up with 10 to 20 vehicles of the best electric vehicles in the world. And a lot of those best electric vehicles in the world come under the Volkswagen brand. So I've decided to do a video on Tesla and also do a video on Volkswagen because the Volkswagen valuation is significantly lower than Tesla, yet they're producing almost the same amount of cars as Tesla. And there is that potential because they have so many brands, they could eventually, and this is just a could, eventually overtake Tesla as the biggest electric vehicle manufacturer in the world. And that could be a fair way in the future, but there is that potential. So I'm going to take a look at Volkswagen in another video sometime in the future. What I'm going to do in this video is not look at anything intangible in regards to Tesla, nothing about the future of this company, because a lot of that is just your own opinion. It's very subjective, and everyone's going to have different opinions about the future of this company. What I'm going to do is look at some tangible aspects of this company, the financials. So I'm going to be looking at growth rate in revenue, operating cash flow, profit, that sort of thing over the past 5 years. Typically, I look at 10 years of history, but for Tesla, I'm only going to look at the last 5 years. I'm also going to look at the sentiment in the company. So that involves just looking at the chart And all you'd need to do to look at the sentiment is just to see if the share price is going up, if there is a trend, downtrend, uptrend, that sort of thing. And lastly, I'm actually going to look at the valuation. And I think this is where you're going to see a lot of people have differing opinions about the valuation. And I think that's the most likely reason I might not be calling Tesla a buy. For those who have been living under a rock or in a cave or maybe on Mars over the past 10 years, what does Tesla do? They are an electric vehicle manufacturer, but they're a little bit more diversified than that. They're also into clean energy, but definitely they are a car manufacturer. Now, I have heard a lot of debate about exactly what Tesla is. Are they a car manufacturer or are they a tech business? But I like to view Tesla as a car manufacturer first and foremost. Founded in 2003. Now, this is where it gets interesting because I actually did think Elon Musk founded this company, but he actually didn't. These two other guys founded it. And then Elon Musk, at the start of 2004, put something like $7 million into Tesla. He became the biggest shareholder of the company at that point in time. This is just after he sold PayPal, and he also right now is a CEO. And he's actually called the co-founder. There was some sort of legal drama. So there's about 4 or 5 people who are considered the co-founder, and Elon Musk is one of them, but he wasn't the original founder of Tesla. Maybe I can get in trouble for saying that. He also right now has a 17.2% stake in this company. Some of the other major shareholders of Tesla include Capital World. They have 3.8%, BlackRock 3.3%, and ARK only 0.6%. I thought it would have been a little bit more than that. The market cap of Tesla does look a bit high at $900 billion, so it's one of the biggest companies in the world, and that's a share price of $909, which was at the close of trading on, was it the 23rd or 22nd of October, and the ticker code for Tesla is TSLA. Now, let's have a look at the financials, the last 12 months, or the trading 12 months for this company. They just completed the third quarter, and so their financial year is the calendar year, and we are able to see their full year results in February of next year. The main things I'm looking for when it comes to financials is significant growth in all these metrics: revenue, net profit after tax, operating cash flow, gross margins. I want to see that either rising or flat, and I prefer companies to have net cash instead of net debt. It's not a necessity for companies this big, but particularly for small companies, I prefer those to have net cash because we've seen a lot of small companies come under pressure because they are net debt. Some people might say, well, we're in a very low interest rate environment, but some of these companies, because they're small, more risky, still have interest rates on their loans of over 10%. Some have interest rates of 20% because they are risky. And also looking at vehicles sold, I want to see that growing at a substantial rate as well. That's quarter 3 numbers. So we're comparing quarter 3 numbers 5 years ago to quarter 3 numbers this year ago. So all the numbers in brackets are from 2016, and all the numbers outside the brackets are the last 12 months. And just look at revenue. It's grown from $7 billion in 2016 to $46.8 billion. And straight away, that is something I want to see in a company. Significant growth in their revenue, and the same goes for profit after tax and operating cash flow. Both of those were negative in 2016, and they've grown to be significantly positive. Profit from negative 675 to plus 3.5 billion, and operating cash flow negative 124 million to almost $10 billion of operating cash flow, which, if you take the share price and the market cap of this company a few years ago, that would have been really attractive. So the share price maybe has tenfold or increased tenfold over the past few years, which would mean the market cap about 2 years ago, before it really increased, was about $100 billion with operating cash flow of $10 billion. This company would have been very attractive if the share price hadn't increased, but it has. They also net cash, $8 billion, around $8 billion. Now, I did get that number fairly quickly, so if that is a mistake, please let me know. The other thing is the vehicles have grown in quarter 3 from 2016, 24,000 and a half to 237,000 vehicles in quarter 3 of this financial year. That's a tenfold increase in the vehicles sold per quarter, and it is the largest electric vehicle manufacturer in the world, although that Chinese company, which I don't know anything about, is catching up fairly quickly. And as we take a look at the last 5 years of revenue, profit, and operating cash flow on a quarterly basis, this is exactly the sort of chart you want to see for a company you either own or you are thinking of buying into. Everything's increasing through time. That's exactly what I want to see. There's a little bit of lumpiness there on a quarter-to-quarter basis, but generally, revenue is increasing through time, profits increasing through time, operating cash flow is increasing through time. And when we did see the share price really take off, that's when the company became consistently operational cash flow positive and profitable. So there is a link between the two when people became more excited about this company. And back a few years ago, that's when there was a lot of negative sentiment in regards to some value investors who saw this company being unprofitable and a valuation of something like $100 billion. And that's why they were shorting it en masse. And they took a massive hit, a lot of those value investors, because they shorted an unprofitable company. But I think their biggest problem was they couldn't see the future of this company when a lot of those growth investors saw the potential of this company growing significantly in the future. The other thing I like to do is just look at the compound quarterly growth rate of revenue, profit, and operating cash flow. And again, this is quarterly. This is not annual growth rate. And a lot of these numbers you would really take if they were annual growth rate, not quarterly growth rate. Now, I've broken this down into 5-year, 3-year, and 2-year increments. And the one thing you'll notice over the past 2 years, revenue, profit, and operating cash flow have started to grow at a greater rate. So this company is growing at an exponential rate over the past 2 years. If we just look at the past 5 years, revenue has grown at 9% per quarter, profit at 24% per quarter, and operating cash flow at 11% per quarter. But over the past 2 years, the revenue has now grown at 10.3% per quarter, profit at 35% per quarter, and operating cash flow at almost 20% per quarter. And that's another very attractive thing about this company. It's starting to grow at a quick rate over the past few years. And again, that's coinciding with how quick the share price has just taken off. So just looking at all these financials, simply because everything's increasing through time and we're starting to see the financial state of the company actually exponentially grow over the past few years, you have to say, based off all these numbers, Tesla is a buy just by looking at its financials. The next thing I'm going to look at in regards to Tesla is the sentiment. And to gauge the sentiment of a company, I look at charts. Maybe there's other ways you can look at the sentiment. Maybe go to Twitter, see what everyone's fighting about on that platform. But a few years ago, there was a lot of shorting of Tesla. I'm not sure how much Tesla is shorted now, but I wouldn't be surprised if a lot of people are starting to short Tesla simply because of valuation. But I'll be looking at the valuation in the next part of this video. Let's just stop at sentiment. And sentiment is really easy to gauge just by looking at the chart. And when you look at Tesla's chart, ever since COVID-19 financial panic, and the down point in that was March of 2020, down March 20, we have seen the share price take off significantly. And without doubt, looking at the weekly chart here, there's a lot of positive sentiment behind this company. In fact, the share price is at an all-time high right now. A lot of people are very hesitant of buying into companies when they're at all-time highs. I might even suggest that is one of the best times to buy into a company because that means there's a lot of positive sentiment behind the company. So just by looking at this weekly chart, we've really seen that sentiment increase in this company over the past few years, and that's coincided with the exponential growth of the financial state of this company. So it's actually not a surprise to me to see this sort of chart for a company growing at an exponential rate, and at a significant rate at that as well. When we look at the weekly chart, we do see a positive sentiment overall with Tesla as we transition to the daily chart. So I do like to look at weekly charts and daily charts. There was a little bit of negative sentiment coming into Tesla around about February through to May of this year. We did see a share price fall from $900 to about $540. And there was potential we might be seeing the Tesla share price move into a downtrend. But we did see a double bottom at $540. That double bottom was reached in early March, then again in mid-May. But we have seen a new uptrend develop during July and August. And right now, that uptrend has continued to progress. and we have seen the share price move to a new all-time high. So just looking at the daily chart right now for Tesla, there's a lot of short-term positive sentiment behind this company, and that has driven the share price from $540 to a current share price of $910. Without doubt, when you look at the sentiment, both on the shorter term, which is the daily chart, then also the medium to long term, when we look at the weekly chart, there's little doubt there is positive sentiment behind this company. So just looking at sentiment, you have to say that Tesla is a buy. Now on to valuation. And I knew before I even started preparing this video, I knew this is where more than likely I won't get a buy signal, because this is where all the debate around this company has been for the last 5 to 10 years. So this has always been this fighting among the bears and the bulls, whether Tesla is overvalued or it's cheap. And at a share price of $910, which was at the closing of trading on October 22, price operating cash flow is at 91, PE ratio 257. Now all these numbers are on a trailing basis, the last 12 months. Price to sales ratio 19, price to book 36. In isolation, all those numbers look really high, and that's why a lot of the bears say that Tesla is overvalued right now. But the other thing is, they've been saying that for the last 5 to 10 years. So you just can't look at these numbers in isolation, because if they triple profit, triple operating cash flow over the next 5 years, in fact, these numbers look actually really low. And that's the thing, and that's the reason why there's a lot of debate around this company, because I think it all depends on your conviction about the future growth rate in Tesla. If you do have that high conviction that Tesla is going to significantly grow over the next 5 years to a decade, it could be looking quite cheap now, particularly because they are diversified. They're into batteries, SpaceX, that sort of thing. If you're if you have high conviction that this company will be successful in growing their brand over the next decade, I can see why some people might consider this company cheap. But if you look just at these metrics, these valuation metrics, I also can understand why some bears just think this company is way overvalued right now. But we can gauge whether this company is overvalued based off historical levels just by looking at where price to operating cash flow, P ratio, and price to sales ratio have stood for Tesla over the past 5 years. So let's have a look at whether this company is overrated based off the historical numbers or valuation numbers from the past. Probably the best way to describe what I was talking about in the previous slide, I was just rambling on for a minute there, was to look at whether the share price increase over the past 2 years can be attributable to just financial expansion and perhaps multiple expansion. So share price can rise for those two reasons. Financial expansion, because the financials of the company increase, the revenue, operating cash flow, profit increases, so the share price increases with it. That's exactly what has happened to Amazon over the past 10 years. Or whether there's been a bit of multiple expansion, PE ratios increasing, price to operating cash flows increasing, enterprise value to revenue has increased. And if we do see share price increasing, I like to know whether share price has increased because of financial expansion alone, or there's been some multiple expansion as well. And if there's been multiple expansion, if we see those valuation metrics increase, that does tell me there's a little bit more hype in the company. You do have to be a little bit more careful. So in this slide, I'm looking at enterprise value to revenue, which is very similar to price to sales. It's almost identical. It's not quite. And what I want to see here is where the enterprise value revenue is right now compared to the history of this company. Well, over the past 5 years anyway. From 2016 to 2020, around the time of the COVID-19 financial panic, enterprise value to revenue of Tesla was between about 2 and 7. Sometimes it got as high as 8 back in 2017. And just before we saw the share price really take off with Tesla, the enterprise value to revenue was as low as 2. But during the significant share price rise we did see during 2020, the enterprise value grew from 6 to a high of 26. And that's telling me, even though there was financial expansion in this company, there was revenue growth. One of the attributable factors behind the share price increasing was multiple expansion. People were willing to pay more for the company's shares during that period. And you do have to be careful with that, because there is a possibility, if the valuation metrics get a little bit too high, you can see a long period of time where, even though the financial state of the company can improve, the share price just goes sideways. We saw that with Microsoft about 20 years ago, where they kept increasing their financials of the company, but the share price just went sideways because the valuation metrics were quite high. And over the past few weeks, few months, we have seen enterprise value and revenue start to increase again. It's up to 21, not at its all-time high. That was reached at the start of this year. So even though the share price is at an all-time high, the enterprise value to revenue is not. So I do think there is potential for the share price to run a little bit more, but you do have to be wary just by looking at this, because a fair bit of hype has led to the share price increasing in this company. Now, you could also say a lot more people are more bullish about the future potential of this company. That's what's been driving the multiple expansion of Tesla in the past 2 years. That's also a possibility as well. In the previous slide, we did discuss whether there has been a bit of multiple expansion happening with Tesla. And with the enterprise value to revenue increasing over the past few years, we can confirm that. But I like to know the numbers behind whether there's been multiple expansion or financial expansion happening. And the way I do that is just to look at the compound quarterly growth rate and compare revenue, profit, and operating cash flow growth to share price and market cap growth over the same period. So we're looking at 5-year period, 3-year period, and 2-year period. How have the financial metrics grown compared to the share price growth? And if we go back 5 years ago to 2016, we can see profit growing at 24% per quarter, which is actually quite favorable to the share price growth. So someone could argue with me right now that Tesla is more undervalued in 2021 compared to what it was in 2016, because profit has grown at a greater rate than share price. But I tend to prefer looking at operational cash flow growth, and that's grown at 11% per quarter compared to share price growing at 16% per quarter. So there has been a little bit of multiple expansion when you look at operating cash flow. But it can be argued, and someone could argue with me, that Tesla right now is a little bit more undervalued than it is 5 years ago. Now, this is not saying that Tesla is undervalued or overvalued. This is just comparing Tesla's valuation to itself 5 years ago, 3 years ago, and 2 years ago. I just want to make that clear. This is not talking about whether Tesla is overvalued or undervalued. It's just looking at its own history, its own financial growth, its own share price growth, that sort of thing. 5 years ago, it could have been overvalued, and it still could be overvalued. 5 years ago, it could have been undervalued, and it still could be undervalued right now. I'm just comparing Tesla to itself. If we look at 3-year history, revenue, profit, and operating cash flow, the growth rate was much lower compared to the share price growth. So share price has grown at 25% per quarter, and revenue, operating cash flow at 6 and 7% per quarter, profit at 15%. And over the past 3 years, you definitely can say there has been a little bit of multiple expansion happening with this company. But if you just look at the last 2 years, everything's grown at a greater rate. Revenue is growing at 10% per quarter, profit at 35% per quarter, operating cash flow at 20% per quarter, and share price has grown at 42% per quarter, not substantially higher than the profit growth. So again, there's no way to say or argue that compared to 2 years ago, Tesla right now is significantly more overvalued when you look at the profit growth rate. Maybe you can argue that if you look at operating cash flow, it's only grown at 20% per quarter, but share price has grown at 42%. So I do think there has been a little bit of multiple expansion happening, and we can confirm that because enterprise value to revenue has grown. But I wouldn't say Tesla is significantly more overvalued than its past. It's a little bit more overvalued, but not significantly more overvalued. I do think one of the reasons why we are seeing share price growing at a significant rate is because profit and operating cash flow and even the revenue is starting to grow at an exponential rate. And some of those bullish investors are thinking that might continue over the next 5 years. And if it does continue over the next 5 years, and Tesla could be looking at fairly good value right now, but it's hard to know whether that's true or not because I don't have the high conviction that other Tesla bulls would have about this company. I haven't done a lot of research on Tesla. I don't have this high opinion or this significant opinion about the future of this company. And because of all that, I'm going to have a hold on the valuation of Tesla right now. That's all I have for this buy, hold, or sell video for Tesla. 2 buys and 1 hold. If the valuation of Tesla was in the range of a buy, I would be maybe doing a little bit more research on this company, looking at the potential growth, and this would be an attractive company to buy. So the only thing that's really holding me back from buying into Tesla is that hold. And I think one of the reasons why is I don't have high conviction about the future for Tesla because I haven't done that research, significant research in this company just yet. If you have a different opinion than I do, if you have done a lot of research on Tesla and why you think having a hold on valuation is a mistake, I'd love to hear your opinions because that's how I learn, that's how I grow as an investor, and I'd love to see what those differing opinions are. If you're on the complete opposite end and you think this Tesla is an obvious sell, I'd love to hear your opinion as well because this company is quite divisive and lots of different opinions about this company. Now, overall, I am not a financial advisor. If you do need financial advice, make sure you seek out a financial expert who is qualified, who can speak to your own financial needs. That's it for this video. Have a good day. Bye.